Hello and welcome to the Block Solid podcast, where we talk about the evolution of the property market, the newest technologies that enhance and revolutionize the world of real estate as we know it, and how we, the owners, the buyers, the renters, the investors, the brokers, and the entrepreneurs can benefit from it all. I'm Yael Tamar, co-CEO and co-founder of Solid Block, pioneer in real estate tokenization, and I'd like to welcome Adam and Sean as my special guests on today's episode. Hi guys, how are you doing?
Good. Thanks for having us.
Of course. So Entoro is one of my favorite industry players when it comes to brokering deals. And I would love to talk to you guys today about what it means to be a broker dealer, how these deals happen, and your plans as you are now going into the real estate space and also tokenization space. How are you doing? Everything's good?
We're good.
All right.
Busy.
Amazing.
Really
So
busy.
I want to talk a little bit about yourselves and our listeners can kind of grasp some details about your bios. So let's start with Adam. Adam Richard is passionate about seizing opportunities that push the boundaries of technology and helping entrepreneurs build successful companies. With over a decade of experience, he's focused on software, tech, and finance. He's worked with and consulted organizations and companies in the fields of cryptocurrency, blockchain architecture, digital securities, alternative investments, security protocols, financial markets, and loyalty rewards. Adam advises startups and consulted numerous early and growth stage companies on their product market fit, go-to-market strategies, product commercialization, and capital raise. He is the head of corporate development and strategic alliances at the Houston, Texas-based Entoro Capital, an investment bank and advisory group that uses modern technology to elevate traditional banking services. So that's Adam. Have I missed anything?
That was good.
That was good. Actually, there's one thing that I know about you. You co-authored a chapter called Efficient Power Markets, Reimagining the Global Market with Ethereum in Transforming Climate Finance and Green Investment with Blockchains. That is really cool. I want to talk about that later. All right.
Sure.
Let me talk a little bit about Sean. Right. And Sean has a very interesting background too, ranging from investment banker to attorney, securities analyst, entrepreneur, and consultant with a focus on private placements, energy markets, and fundamental and technical equity and commodity analysis. Sean Levine has held a host of roles. He is a managing director, head of regulation A+ and CF at Entoro Capital. And he, in the past, has led a team focused on the design, development, and optimization of unconventional, innovative trading systems. That's really cool, Sean. I want to talk about that, how you do that, and how your experience has propelled you to your current role at Entoro. You have written and published newsletters and reports on the oil and gas industry, economic and geopolitical dynamics, right? You hold an entrepreneurial certificate from the University of Chicago. You also have a degree in law and BA in political science from West Virginia University College of Law. So a lot of degrees there. That's really
Hopefully no more to come. I think I'm done.
No more to come. Why not? How about a PhD?
I'll go for securities licenses now. That's enough. Enough degrees.
Awesome. Now, Adam, where did you go to school?
So I actually started school in Houston, going to the University of Houston. There came a point when I was reflecting on what I was really going to use those degrees for. And I just had this entrepreneurial bug that I couldn't kick. And I realized school would always be there. Opportunities are not always there. And so I decided to kind of jump on launching my own companies and never looked back.
Wow, that's cool. You and Steve Jobs and a few other guys, right? Jumped the school train onto the entrepreneurial train. That's awesome. So talk to me about this modus operandi of yours, passionate about seizing opportunities that you just mentioned, but opportunities that push the boundaries of tech and helping entrepreneurs build successful companies. Can you give me examples of some of these companies?
I can give a couple. I don't know if I'm going to name names, but in terms of just seizing opportunities, I think the one that most stands out to me in my life was when I decided to depart from my own company in order to focus 100% of my time on Bitcoin. This was December 2013, and I didn't even know what I was going to do at the time. I gave myself a couple of months to try to figure out a few different game plans, and just kind of dove in head first. I knew that this was where I wanted to be, focusing on crypto. I came up with a few ideas and some of them came to the point where they were operating. Some were ideas, testing market validation. But in my opinion, one of the best decisions I ever made.
Wow, 2013, that's really early. So what did you do exactly?
Well, I had a lot of ideas. And I think the first one I really acted on was creating a futures market using contracts for difference in order to hedge against the volatility of Bitcoin. Mm-hmm. Like a lot of my ideas, I was very early. So
that is really cool. I mean,
gave it a good try.
Probably early to market too, but just the fact that you thought about it that early, Bitcoin came about, 2010, and only in 2012, that's when companies realized that they can use blockchain for other things, right? There was like kind of this first ICO, and then, the industries were thinking about blockchain applications. So that's what I'm saying. It's super early.
Yeah. I mean, at the time, it was a frustration of, that I think a lot of us faced. The volatility of crypto is something that we either embrace or scares us a lot too at the same time. So, I knew a lot of people that were interested, but didn't really like the volatility as much. And so I set out to try to create a solution for that. What it ended up turning into was a consulting company. And meeting the right people along the way allowed me to realize that those that were really doing well, profiting in the space, were typically attorneys, CPAs, consultants. And so decided to embrace that, but at the same time, incubate my own ventures simultaneously. And so I pursued a lot of different things over the years. So I was fortunate to be able to do that. Some of them were complete failures. Some of them I had to kill quickly, but it's been a lot of fun.
That's amazing. Sean, what about you? Have you arrived to Bitcoin and blockchain, early on, or were you a late oncomer?
I think I'm still late. I see the potential and I like it, but it's not, you pick the things that you're going to figure out and understand, and then you're going to trust good partners and friends who have focused in those areas. And fortunately, we have Adam. So, I've kind of honed in on kind of the crowdfunding space, both in terms of Reg A and CF is kind of my platform and my main focus that I'm a strong proponent of. But, I think generally, look, there's a confluence going on of all of these two universes are starting to come together because you're starting to see digitization of securities and assets and things. And that is particularly easy in the Reg CF space, but also there are paths and ways to do it in A as well. So, and of course, within the private placement universe in Reg Ds for accredited investors and institutions, that's wide open as well. And Entoro does some of that too. Adam handles some of those deals. But for me, as you mentioned, I've kind of moved from passion to passion over the course of my career, but always, I try to hang on to the things, retain enough takeaways from what I've worked on and kind of build. So I'm always moving the ball forward as I go from thing to thing. And I also like the idea of work should be enjoyable in ways or just becomes miserable. I don't want it to feel like work. And so the reason it shifts for me from time, people's interests change over time. And as you proceed through life, you see especially when you're entrepreneurial, you see new opportunities, you see trends coming.
You also like to learn, Sean. You like to learn. I can tell by the number of your degrees, right? So you're like, I want to learn this, I want to learn that, I want to do this, right?
Yeah, knowledge and being exposed to new ideas is just enjoyable for me. And also the other dynamic for me has been, at least certainly over the past decade anyway, if not the beginning of my career, is just, I like working, to the same token of it not feeling painful, I like working with people that I like. And so as you grow through your professional career and you encounter new people and you make friends with new people and you start to, again, if you're entrepreneurial, you're thinking, as you make friends, you're also like, is there an angle here? Could we do something together that would bring what you're good at and you're passionate about to what I'm good at and passionate about and make something new and amazing. And so that's also been something that I've done and it's kind of helped steer me from opportunity to opportunity as well. Fortunately, I have a lot of good friends here at Entoro and I think I'm planning. I don't have to change. The space is constantly changing, so it stays exciting. So I don't see myself going anywhere for moving on anytime soon. There's so much to do here and now.
That's a great point, by the way, Sean, how the space is changing. And I think when you talk about the space, I think you mean finance, right? The financial space.
Yes.
That's changing, the investment space. It's absolutely true. And blockchain space by itself is changing even faster. Seems like we have a new flavor every day, and sometimes you wake up to a new type of token and like a big institution that all of a sudden is investing, in Bitcoin or security tokens. So there's definitely no boredom, right, in what we do in blockchain. But in finance, it's true. There are always new financial instruments and new things to do. And I think that's why, you guys are doing what you're doing now and getting into the tokenized space through us and some other players, right? So hopefully there's no boredom for you in the near future, right, Sean?
No, nothing anytime soon.
Not anytime soon. But tell me a little more about your experience in Reg A Plus and CF. Like, what changes have you seen happen from the beginning of your involvement or your career?
Well, so my last position prior to joining Entoro, and there was some overlap, was with a large financial publishing house. And we can get into those sorts of entities in a little bit. But basically, financial newsletters, subscription-based newsletters for folks looking for investment opportunities. And I've been at that firm for about 3 years, getting to 2019. And the crowdfunding portals have been around for a while, but it takes some time to get to sort of a critical mass of penetrating into the popular zeitgeist and creating enough awareness for it to, for everyone to really gravitate and start to understand what's going on, at least enough to learn more and then get involved. Similarly, to a lesser degree in popularity, but Reg A, which is for folks who don't know, it's basically a larger scale, more heavily regulated version of CF in that, it's still retail, regular people, investors who are able to participate in these investments, but it's just at a much larger scale in that CF was $1 million cap limit and A was $50 million. And those have both changed. We'll touch on that in a second too. But so 2019, I'm at this publishing house and they just had 3 or 4 years of these types of raises kind of percolating and being out there. So the publishing house launched its first private deal focused service. They had done some one-offs here and there where they had other services where they would recommend publicly traded stocks or options, and they would throw in a private deal just to kind of see how it went. This is, the first one's just dedicated to private deals only. And other publishers that I was aware of also started to do it around the same time. And from my visibility at the firm where I was, just amazing demand and response from the investment community and the folks that are, it's the newsletter universe of investors is not necessarily representative of the entire retail investing market, but it is a nice subset and gives you a nice snapshot. And also it is a passionate subset because these are people paying for guidance on, care enough about their investments and finding new opportunities to pay and subscribe to these services. So great demand. And then it took off. And we also, in speaking with the issuers who were being covered by these companies, seeing how quickly and how much they were raising, it was just really impressive.
What did you see? And do you have any comparison to an alternative type of marketing strategy?
Well, so an issuer going in that track could, for a CF, you get on the funding portals, but you don't, and we speak with some of those portals, and we know that a lot of times all they do is just sign up, launch, file their filings, and just trust that the platform is going to do the job. And, depending on what you're doing and how well your story and your company or your product or service resonates with the regular investing public, you might be able to pull it off that way. If it's really sticky and compelling and attention grabbing, then you might be able to do that. But by and large, it seems that if you you can have a good marketing team, you can run a digital marketing campaign, you can have other channels that you use, and that would be another layer. And you can do that on the Reg A side as well. But those can also be very expensive. And again, depending on, you can polish something that is not that attractive as much as you want. And maybe it may help some, but it may only help so much. And again, at significant cost. So that's another approach that you can take. And it may vary. Different firms are better or worse at it than others. And then finally is, to our view, is that the power of, just from my experience and seeing, when you hear, you pay attention to the space and you hear about the real big success stories and who has raised so much money, the aspirational companies that people want to be like when they come out and pursue that same path. And just from my understanding, because I know all of the publishing entities and who covers what, usually everybody acts as if they're responsible. If you're a marketing firm or you're a broker or you're anybody who was part of this raise that made 30 or 40 million in 4 months, and everybody claims victory, but knowing who got covered by these publishers and who didn't, the vast majority of the time, it was somebody who got covered by a publisher that succeeded. So that proliferation of that has been important. And then the other thing that's been important has been just this week, it's a timely podcast, the week of March 15th, depending on when you air this, the US government instituted some changes and improvements to the A and CF regulations and expanded the scope for both. So before, CF was capped at 1 million and now it's 5 million. And that's effective as of the 15th. So we were waiting for months. We knew what the rules were going to be, but it finally has taken effect. And then for A+, it's now 75 million rather than 50. So that's just shaking everything up and the way folks are raising capital.
Yeah, this is super interesting. And I want to explore a little more later in the podcast with respect to kind of like conversion rates for these industry newsletters and things like that. Like for me, it's super interesting. I come from a marketing background originally, financial as well, but I kind of rebranded myself along the way in 2010, 2011. I took on myself a role of like social media, digital media. This was very, very new for institutions back then. So, kind of jumped on board and took that on. And that's very, very interesting for me. I want to go back to Adam for a minute and ask Adam, can you describe for listeners what a broker-dealer really is and what it does and how, what is the process?
Sure. So there's a difference between what a broker-dealer does and what an investment bank does. I think it's important to understand both aspects because when an issuer is going to raise capital, look, before in my own ventures in the past, I raised capital. Did I ever use a broker-dealer? No, because I was raising small amounts of capital. But whenever you're kind of going to go raise more seriously and you need to be engaging with institutions, family offices, it helps to have professional guidance and to make sure that everything that you're doing happens within the confines of the regulatory framework. And so an investment bank is really where issuers start whenever they're going to start raising capital, because that helps set the guidance for going to raise capital in a compliant way. The broker-dealer is the entity that actually is selling the securities. It's the one that has to answer to FINRA. And so whenever an issuer is, for example, selling equity, that has to be sold within the confines of either an exemption or a non-exempt offering. And so the investment bank, in Sean and I, in our case, that's Entoro Capital.
Entoro Capital is an investment bank.
It's an investment bank, and it offers advisory services to issuers to help guide them in structuring their offerings. And so we spend a lot of time on getting to know the issuer, both the team, the business model, the revenue model, the business plan, in every facet possible, because we need to fully understand who you are and what you're trying to do and why you need the money and how much you need. And then we also understand, we're able to put ourselves into the investor's shoes and be able to understand what the investor sees. And how do you best tell that story? How do you break it down? And how do you structure the offering so that you can have a successful capital raise? So up until the point of actually raising the capital, you actually really need to be engaged with Entoro Capital, the investment bank. And then when you go sell those securities, it's Entoro Securities, the broker-dealer, that's actually brokering those transactions. So the broker-dealer is the one that all the compliance falls onto. It's the one that actually sells securities. And in the case of Entoro Capital, in the case of Entoro Securities, it's a broker-dealer that interacts with issuers and investors for private placements. The broker-dealers can do a lot of different things. Broker-dealers are typically associated with public securities, which Entoro doesn't have anything to do with. And so most broker-dealers are acting as the principal dealer or the agent, as in the case of, you might be market making, you might be brokering transactions, or just acting on behalf of your clients to buy or sell securities in the public marketplace. So broker dealers can do a lot of different things depending on what segment of the market they focus on. In our case, in private placements, it's pretty straightforward in terms of complexity, because private placements are, to me, they're more simple than publics, because publics are just so diverse. There's so many ways they can appear that it's something that, at least at Entoro, we feel it's good to be good at one thing, hone in, focus on what you're good at. And so that's the difference. That's what a broker-dealer does. And the difference between the broker-dealer and investment bank, I think, are important to differentiate.
Understood. So when a client comes to you, what do they expect? So I'm talking about the investment bank, right? The client comes to you. What kind of client would come to you and for what kind of raise? And I know you mentioned the strategy and kind of putting together a plan and then executing that plan using the compliance of the broker dealer. But yeah, walk me through the process of, a client coming and understanding whether there's a good fit, what kind of industries you guys are serving.
Yeah, there's a few things that we initially discuss. And one thing is, do you have something that investors want? And do we know investors that want that thing, right? If we don't know the right investor base, it doesn't make a whole lot of sense, right? And so we have verticals that we focus on. There's investment banks and broker-dealers that solely focus on one very narrow vertical. We're a little more diverse than that. We cover quite a few different verticals, but understanding who your target audience is, what your successes have been, and I think more importantly, even the management team themselves, what their accomplishments have been and how they work together, understanding their personality, their own dynamics between the management team, the executive team is very important for us. Once we understand who you are, what you're trying to do, what you've done so far, then we start looking at your pro forma or financial projections, your marketing documents, in order to better understand kind of where you're going and how you plan to achieve what you're aiming for. Because we have to go sell those securities at the end of the day. And if we can't sell it as good as the founders can sell it, we're going to fall short. And so we need to really embed ourselves in understanding who they are and how they plan to achieve their goals. And so understanding where you're going, we need complete transparency. So the investment bank, broker-dealer, and the client end up forming a relationship that's, I think, is very close. So we dive in deep in our due diligence. I think any investment bank out there is going to do the same thing in order to really understand that issuer. And the expectations that come with that are really important. So setting expectations early is something that we believe in and practice. We're not afraid to tell issuers that this is going to be difficult or that you have a ways to go before you're actually ready to go raise capital from investors. Sometimes issuers do come to us completely ready to go to, approach investors, but that's definitely, we don't see that as often as we see issuers typically come to us and they need maybe a month or two in preparation to have all the documents ready to really go to market and pitch investors.
We also sometimes have to have the conversation that it's not going to work. And so, because for whatever, and even more, it's already a test. Obviously we have to believe in the deal, regardless of what type of deal it is. But for those of us over here on the ANCF side of things, it's an even more stringent test because the regulations and sort of the responsibility that is, I don't want to necessarily go quite so far as to say fiduciary duty, but the responsibility and onus that the regulators put on a broker who is marketing to retail is even more stringent than it is to, what would be expected to sophisticated accredited investors. So we really, if we're doing an ARSC, we really have to buy in. So if we're with you, know that we're with you and we really buy it, because otherwise, we walk away. There are times that we have to say no. We don't.
Risks, right?
That's right. That's right. It's not just all about, some big cash grab and being there at picks and shovels in the middle. It's, we really do need to think that this is a reasonable opportunity, if not a strong opportunity, hopefully, for the segment of the market that we're targeting and trying to sell into. Right.
Sean, you mentioned the exposure to retail. Do you or does your broker-dealer arm have a different set of licenses than a broker-dealer that, let's say, markets only to the accredited investors?
Well, so for this splits hairs a little bit for the ANCF deals, we are, Entoro Capital, the investment bank, is not generally going to be involved and be engaged under those arrangements. It is primarily going to be Entoro Securities, the broker-dealer. And that doesn't mean, you're still going to get a little bit of that service that the investment banking arm might do, because some of us operate in both sides of the business. And, I certainly am going to look at your structure of your deal, of the security that you want, and think about, is that optimal? Does that make sense for what you're trying to do? So you're still going to get some of that value, but the primary focus for those specific types of raises, for us anyway, is to just try and help you raise the capital. Like I know sometimes over on the Reg D side of the business, and Adam's a little bit more involved in the accredited raises and everything. Sometimes with Entoro Capital, like I know some of my colleagues are helping build slide decks and things like that for a little bit more of that in-depth. We're happy over on the security side we'll look at what you're producing, but I'm not going to build your deck for you. You need to have a little bit better idea in hand. And then I help you fine tune it, but I'm really focused on helping you raise the money. So it's a little bit of a different approach. There are good reasons for doing it. Again, from a regulatory standpoint, we just liked it because we're going to retail. We like that very focused on the objective that we know how to do and we know we're compliant in doing it.
Awesome. So you talked to me about the newsletters and the publishers. Now, I would love to understand the mechanics of it. So like that funnel, model, right? As a marketing person, I'd love to hear a funnel.
It is a funnel. It's funny. I used that phraseology on a call the other day and somebody came back with, as Sean would describe it, the funnel, but it makes, because they're not from that world. And honestly, I'm not from that world. I just learned the jargon by kind of soaking in it for 4 years. So those entities, it's an interesting revenue model. They oftentimes will have a free service that is a sort of general, folks who have general interest in financial topics. It's almost more in the vein of kind of like a CNBC or the free content on street.com or something. I don't know if they even have free content anymore, but for a while, until they built big enough brand, they did, some of that general financial interest stuff. And then they get lots of people, lots of eyeballs on that because it's free and, it's interesting enough, but they'll pepper in, they'll start the folks who will be writing some of those stories or the people they'll interview for some of those stories will be some of their analysts who are the figureheads and the faces for some of the pay services. So that's at the top of the funnel. And then you go a little further down and they have what they will call a front end service. And the front end service will be, this is for people who are willing to pay something for financial content and some very general recommendation, kind of like obvious stuff. It's not like secret sauce. It's the FANGs of the world and this stuff. Oh, really? I should buy one of the FANGs, okay, thank you. But they'll charge, and maybe they'll charge, $100 or $200 a year for that, which is still, that sounds like a lot, but wait till we get to the back end. And so you do that, and then that chops the list down significantly, but it's still a pretty good size list because it's not too onerous for people who are pretty passionate about investing to get them to, anybody can play in that space. So they take these broad theme, but still specific recommendation services. And then they take that list and they target that list with what they call the back end services, which is where you get like options trading services and some of these private deal services. Or, maybe they focus on a very specific sector or industry or do deep dives. And sometimes it's micro caps. It's all different kind of things. And those services can be, $2,000 a year or more. Up to, in some instances, I've heard, I don't think our firm did it, but, $10,000 a year, really like ultra premium lifetime services and things like that. And so that's why the publishers don't, it's a weird model, but it's kind of got a strange level of credibility to it as well, because they're making so much money from these subscribers that they're complete free agents and unbeholden to the entities that they cover and talk about and recommend in these services. These are not the kind of shops that are like getting paid they're not paid marketers in that way.
Yeah.
They're free agents, they're independent. And that's a little bit of the challenge for folks in our position because we can't make them cover our clients. It's not, that would be problematic and a bit of a conflict. But, if we do, by having those relationships and we get, they do need quality deal flow. They need, and that's why them talking to a licensed broker dealer as a potential deal flow source is beneficial for them because they know that anything we're bringing to them is already getting a good solid round of vetting before they do their own vetting on top of it.
Okay, Sean, and specifically for the funnel, how many people would this newsletter go out to on average? And how many, let's say a percentage of these people would click on a specific deal and how many of them would fund the deal and at what amount?
So I wasn't in the marketing department for the firm, but I have a rough, the free services would have numbers in the millions. I mean, a low million, but maybe a couple million folks periodically reading this content. I think where I'm a little more murky is sort of the middle area, the front end services. And I think that was, it could be 50,000 toward 100,000, somewhere in that range, all told throughout the number of different publications that the one publishing house had. We're not talking about one service here. And then back-end subscribers, I think it would generally be, 5 to 10,000, all told between all the different services. But some of the more popular services might have a few thousand people, 2,000 to 5,000 people, maybe paying, again, a couple $1,000s a year. It's about the warmest, and that's the warmest lead you can imagine. It's a private deal market is opaque. They can't just go, on TD Ameritrade and pull the stuff up. The deals are all over the place. They live in lots of different places. So having someone out there aggregating that stuff for them, when they're already the kind of people that are paying for, if they could get on TD Ameritrade and pull up all the lists, they still want help on what to do when it's available. So when it's not available, it's that much more valuable.
Absolutely. So they're curating the deals for these investors, right?
Yeah, essentially.
All right. Amazing. Like, we probably won't know the percentages, but usually, from my experience with newsletters, successful clicks would be, 3%, like really successful 5%. But if you have a few, no?
These people are, as far, at least, even open rates, that doesn't necessarily mean closing.
Yeah.
But you would see open rates of 20% or more a lot of times. Like they're because the copywriters for this space, they tend to attract really strong talent because they can make very, very good money if they're successful. And so they tend to folks who are really good at this tend to gravitate toward the space, and they tend to, they really pour over these promotions and content that they put out, and they've had it down to a science pretty well.
That's really awesome. And Sean, are you bringing some of that into your Entoro role?
So again, I wasn't a marketer, and I'm actually becoming, I think, famous internally at the firm for not being. I make that caveat all the time because I don't want to. Don't like marketing work, but I respect it. I just like, what's your favorite flavor of blue? That's what I think when I hear these. You think about these topics, it just doesn't. But no, certainly what I do know. Again, I know that they're good at it. And I know them, and I know what they're looking for. So that's what, in that way, yes, I'm absolutely bringing that to the table. And that's almost the whole core of the whole value proposition is, we know how these raises get funded, and we are plugged into those channels.
Okay, so you're sticking to those channels as a methodology for your crowd CF and Reg A Plus.
We more services are coming online. I mean, they see this too. They're excited about these new regulatory changes, and some of them are planning launching new services. Ones that have existing services that don't focus on private deals are starting to pepper in more private deals. So the opportunity to tap into those channels right now, it's up until now, it's probably been, as powerful as the channels are, probably a half dozen entities that had dedicated private deal focused services. That's probably going to double. And then we're going to see all the other folks who don't have dedicated just starting to throw them in occasionally. It's going to explode.
It's going to explode, but,
in a good way.
In a good way. Great. All right. So back to Adam. I see you're getting a little bit bored, so we're going to throw you something fun. I want to talk about this chapter you wrote on reimagining global market with Ethereum. I want to talk about Ethereum, why Ethereum, and also climate finance. Like, how did you get to that, to those industries? And, has anything changed?
Yeah, the last point you made that's a good one. Well, I'll hit on that. This book was an interesting opportunity. A bunch of different chapters contributed by many different people around the world. And originally I was going to write it by myself, and then I ended up roping in my CTO. So this was one of the companies that I incubated back in 2015. We started off focused on renewable energy credits and trying to create a more efficient market for them, with then the hopes to create a more fungible carbon credit market. Going down that path, we engaged in some pilots, but then those conversations with companies in the renewables space ended up translating into, like, we were just really kind of poking at, like, where are your problem areas, right? And we're talking like big renewable power generators. And what we started learning was that they could really use a lot of help in increasing efficiencies in wholesale power transactions. This sent us down this rabbit hole. I mean, this is 2016, 2017. And I think at the cusp of those 2 years was really the moment when it was like, when it comes to blockchain, whatever you're thinking, it's not big enough. Like, you need to be thinking bigger than that. And so we took it as far as creating a kind of global transaction system for energy, like stable asset basket based currency. That way, power can be traded like globally without any friction at all, and how to actually tap into like all the IoT systems. So if you're going to track power production, you need to have IoT integration. You need to have you have to be able to tap into the communication line from power generation to the trading terminals themselves. So we had to imagine this really robust system where part of it could exist in a public decentralized blockchain, but because of the critical assets that are involved in power production, some of it has to be on private chains as well. So you have to create this hybridized system. And so when we were approached about this, it was really thinking about where does green finance evolve with the use of blockchain technology? And so we determined that, well, with our focus on Ethereum, our expertise that we brought to the table, we could actually help explain what that would look like in an ideal world. And that's a lot of what the book was about, was really imagining how do you really transform an entire industry that in some ways they're very early adopters, but in other ways they're latest adopters, right? How banking can be as well. So it was a fun experiment, to think about how you really do all of this. And ultimately, I had to make a decision to continue pursuing that company, which was definitely my passion project. I had to make a decision, though. Do I continue doing that, or do I take on the consulting company, a little more seriously at the time? And unfortunately, I had to put Volt Markets on the back burner, which is where all.
It was very, very early. Again, you're always coming in 2-3 years before it's time.
Yeah, exactly. So that was the basis for the contribution to the book. And today the book's used in colleges and academic, courses, and it's not a cheap book to purchase. But I don't know if you can get a copy of it online, but the authors across the book are some very notable people, and it was fun working with them.
I actually definitely will check it out and include it in the notes. And I want to say that this type of technology would have been very useful in Texas this past winter, wouldn't it?
Yes, it would have. Extremely useful.
Yeah. Hopefully you Entoro Capital is based in Texas. Hopefully you didn't get a $5,000 bill,
No, but when I was living in Houston, my power provider was Gritty, and they just had to file bankruptcy this past week because when I was using them as my power supplier, I was actually paying wholesale rates. They would pass it on directly to the customer. And they had customers last month receive bills in thousands of dollars because of one day's power usage, and they just filed bankruptcy. It's sad. It's a big problem that needs to be needs to be fixed in some way. None of us have the.
Didn't power regulator some people try to appeal that and they said no, those are valid, those are the bills.
Yeah, they did, but I hear that actually the companies themselves are canceling. Some of them are canceling these high bills, and yeah, it's
certainly from a PR perspective, not a bad idea. But when you got a captive market,
people are listening. If we learned anything about the power of the market, from Robinhood and GameStop and all of that, right? This year has been unreal. I certainly feel that the market and the public is learning really fast about finance, about different products that are out there. And, that's empowering. It's empowering to them. And I think that you guys and the Entoro Capital now has this unique opportunity to really speak to the market, right? With your retail focus, Sean, and also with a blockchain focus, Adam, right? Can one of you talk about the direction of blockchain or tokenization and also real estate, right? For Entoro Capital in the future?
Yeah, I'll start with just blockchain in general. Prior to joining Entoro acquired a blockchain consulting company in 2017. So I think Entoro was a leader in this space in terms of the type of company that Entoro is. I think very, very few had even considered it. Banks were doing some pilots, in 2015, experimenting with blockchain tech, but they weren't really trying to do much with it. Entoro worked on, to say, $50 million, securities tokenization in Q2 2018. I came on right after that. So I was like, okay, that's a company that's, I think, looking in the right direction and definitely a pioneer. We started seeing a lot of broker dealers popping up saying, oh, we're doing security token offerings. And now you look across the landscape and you look and you ask, oh, how many of those are left today? That was only a few years ago. And I mean, there's very, very few. So we're still going and we're very much focused on blockchain technology. In terms of tokenization, we've maintained a very agnostic approach to it this entire time. We didn't want to adhere to a specific blockchain or a specific token standard because, for one, if you've been in blockchain or crypto long enough, you know that things change, newer, better things come out. And to take that kind of tech risk, I think is something that's like, well, if we don't have to, then let's not, right? Let's just do what's best for the issuer. Because if a certain token standard is better for tokenizing real estate, another token standard is better for tokenizing art, well, why would we commit ourselves to a technology that allows us to do one but not the other? So we've really been agnostic. And so we have relationships with all the tokenization platforms. And if an issuer says that they want to work with certain one, great, that works for us. It makes no difference to us because it all actually happens post-transaction.
Exactly.
Now, does it benefit us if we were to actually wrap that into our software platform too? I mean, I guess it could, but I think we'd rather work with an issuer in a way that makes them happy, where they end up getting really what they want. Exactly. And that's been important for us, right?
You don't want to compete with your supply chain as well, because sometimes issuers come with their own platforms and their own standards.
Absolutely. I think it's important to know what your focus is and what you're good at and do that.
What's your USP? What's your place in the supply chain? That's why I'm really excited about what you guys are doing, because I think providing access to money, access to capital, also knowing how to get there is probably the most valuable. Obviously, liquidity component in the real estate world or in general in the equities world is really important. But again, the tech platforms and the tech is not what's guaranteeing the liquidity. It's giving a path to liquidity. But at the end of the day, who's going to bring liquidity? Whoever can bring the most people to buy stuff, right? So that's, Sean's area of expertise.
Yeah, it's a good kind of point to dovetail over into where I'm working in, tokenization, digitization, particularly in terms of real estate. That is another trend that has been recent and growing. You had around the kind of concurrent with the growth of interest in the crowdfunding platforms, you had this whole other set of platforms that were coming along that were focusing on real estate deals and private real estate investment. However, most of those platforms were focused on Reg D, 506C, accredited investor, more limited, retail could not play. Okay. So you had a lot of people who became aware of those platforms because they were learning about all that. Once they started becoming aware of fundraising platforms, they started seeing all the different kinds, and they saw those other ones with doing the real estate, and they saw generally that they weren't really for them. They couldn't really participate in. And now it really a lot of what's driving it is a change in the regulatory regime for, much you can do, 50 may not have been, in some instances would have been enough. And you did see some Reg A raises for retail and real estate, but 75 is even more, puts up even more potential. And really the big driver is the change in CF going from 1 to 5, because now the crowdfunding portals can start to host those deals, because 5 can be enough for at least one-off project to get capitalized. And you're aware of that. That's something we've talked about. So seeing that, and also a lot of the folks who are real estate operators who are wanting to turn toward crowdfunding are also at the same time looking at creating those offerings as digitized assets as well.
I have a very important question related to what you just said. So now with tokenization, we'll have a more developed secondary market, right? So which is much more conducive to retail investment. It's more open in terms of regulation and compliance. So if we have secondary market for retail investors to invest, how important is it that retail investors have access to primary offerings?
That is a good question.
You want me to take this, John?
Please, you go ahead. I may have some comments to follow on.
Yeah. How important is that retail investors have access to retail offerings, right?
To primary.
I think it's extremely important that they have access to primary offerings. It's the reason we focus so strongly on private placements, alternative investments, because to us, that's a really exciting investment class. The fact that you can introduce the opportunity to exit or divest your position without holding it as an institutional investor would have to hold it for a long period of time, giving the retail investor the option to get out whenever they're ready to get out. I think that is like what alternative investment has been missing for retail investors all along. And because of that, I believe that using blockchain technology, bringing primary issuance to retail, the evolution of fintech platforms, I think it's only a matter of, I hope in the next 5 years, that the difference between investing in public securities today and smaller private issuances later becomes so blended that you won't really know where one stops and the next begins. And I think that the liquidity that we'll see by that point, it will mature, it will increase, and we're going to see that investing in Apple and investing in a small retail offering, primary issuance offering in real estate can offer me the same ease of getting in, the same ease of getting out, but with potentially more upside, maybe with something that aligns with my own passions or interests and allows a retail investor to invest in really anything that they can imagine.
Something that is critical to realize and understand as the entire underpinning for this whole conversation and this whole trend that we've seen toward the evolution and growth of crowdfunding, whether that's A or CF, retail investors being able to participate in private deals, exempt transactions, is that the public equity securities markets are terrible. I hate them. I think generally, a few exceptions, but investing in a public equity at the point at which they enter the public markets, so much of the value creation, 80, 90% of the value creation these enterprises are going to see, by and large, has already happened. And people know it. And that's why everyone wants to do this. Everyone wants a piece of this because they've seen what happens. They know enough to know that there's stuff they don't know, and the backroom dealings and everybody, all the money guys getting in and making that all the huge thousands and thousands of percent return on these early stage companies, and it's infuriating. And if you think about an IPO, even if they do, there's a hot IPO, I'm going to get in on it. I'm going to get my money now. Okay, well then the IPO happens and it prices at 20, but then when it starts trading at 50. And by the time you got into it, you get in at 65. And then it pulls back to 45 on the day. So all the guys all the inside baseball guys and the founders and everybody, they're having a party. They're ringing the bell because they should be, because they made a bunch of money. And you're down and you're hoping they have a good earnings report and they can keep the momentum going, because otherwise they're down again. They got screwed again. And that's why everybody wants it on these deals, so having the secondary market capabilities as well, that's kind of the brass ring for us, because and when you do get it to that point, then you're kind of getting the best of both worlds. You're not in a liquidity trap, but you're able to start recapturing that value that the public markets have flushed down the toilet. You can't get.
I love what you just said, liquidity trap. I'm going to be using that.
And I think it's important that, we have great relationships with the, digital ATSs. And I think it's really important that they know we don't want to be an ATS. And most ATSs don't want to do primary issuance. And it makes for a great relationship.
Yeah, absolutely. One note that I want to add is I did a presentation today at a conference in South Africa, sitting in my living room in Tel Aviv. But nevertheless, the new COVID-19 world is less exciting, because I could have been on a safari right now or diving with crocodiles or something like that. But, But I'm talking to you guys, so that's a plus. That's a bonus. So what I actually read in the preparation for that was that the Reg D private placement transactions in 2017 were over 37,000 transactions. Compare that to the number of the IPOs. And in the volume, it was $1.8 trillion in capital raised for the Reg D. For comparison, IPO was just 180 billion, right? So just these two numbers, there's so much more in Reg D. Now that we have Reg CF and Reg A plus, I want to get those numbers and understand those numbers. But I think that when we're able to take these private placements to the public, the numbers are going to go even higher, and you can see how much more significant they are.
It's very small now, but it is taking share, at least relative to how the scale that it had. It is growing just exponentially. And COVID, you mentioned COVID helped last year because a lot of venture capital, the earlier part of the capital funnel, where there's a degree of overlap between, potential for CF or A to carve into that business. Some of those early stage venture capital shops just buttoned up and refused to do anything and said, hey, let's, it was April when things were getting bad. And they said, all right, well, we know we have a term sheet with you, but we're going to stick a pin in this and see where things are in the fall. And we're talking to companies that are, growing, that have sales and growing quickly, and they need that capital. Like, fall, we'll be dead in the fall. We can't wait. So some of them came over into our playground. And when they did, it helped validate the space somewhat, because originally when these were a newer model and people were, you had some of your maybe less credible or less attractive deals who were trying to exploit these channels. And then you had just very early stage companies that didn't have any other option, couldn't get a term sheet. And so I've got a good idea. I'm going to go do a CF and raise 500 grand and go get started. Which was fine. But now when you start seeing these companies that have strong sales and growth, they're still early stage, but sales and growth, tapping the A and CF channels, it really lent a lot of credibility. It forced the folks over in VC and angel land to kind of realize, okay, maybe it's not as much about whether there's a crowded cap table or not, and we don't have to care that much. If it's a quality company and they're doing quality things, we're not going to just kick it out of bed because they did a CF at some point. So again, convergence.
Yeah, absolutely. And why we got to mention COVID is because those listeners from 2040, they have forgotten about this bad generated disease. Maybe that's how they know it. All right, cool. Guys, we're about at the end. Is there anything else that you want to mention about Entoro, by yourselves, blockchain, real estate, tokenization, any words of wisdom or predictions for the future?
Exciting times, heady days.
Yeah, I agree with you 100%, Sean. All right, so thanks for joining me on the Block Solid podcast today, Adam and Sean. It was awesome having you on. Really cool. Thank you, Yael. It was great to be here. You can find us on Spotify, Apple Podcasts, or by visiting our website at solidblock.co/podcast. If you enjoyed the show, don't forget to rate and review and spread the word. Thank you.